Hello everyone, myself Manoj. So here today we'll see one of the important chapter in the second PUC, that is admission of a new partner. So here there is a question present. So without any delay, directly we'll go for the question and the step-by-step process how to solve the sum and fetch the maximum marks out of the sum. And this sum carries 12 marks. So and here it is one of the important question. So we'll directly go into the question and so see the process how to solve the sum directly. So here Maya and Chaya are partners sharing profit losses in the ratio of 2:1. Their balance sheet as on 31st March 2024 is given below. So balance sheet is given and there are liabilities and asset. Liabilities we have so and so items along with the capitals of Maya and Chaya. And assets we have so and so items and total of balance sheet is 1,45,000. So this is one of the balance sheet given in the firm before going for the admission of a new partner. So admission of a new partner means admitting the new partner into the firm for the so and so conditions. Okay. So first we'll see the adjustment on 1st April 2024. Shreya is admitted into the partnership on following conditions. That means so 1st April 2024 the firm that is Maya and Chaya are going to admit Shreya as a new partner on the terms and conditions. So we'll see what are the terms and conditions. So Shreya should bring cash as 25,000 as capital and 15,000 as goodwill for 1/5 share in the future profits as per the AS 26. So here Shreya is bringing 25,000 as capital and 50,000 as goodwill for the future profits of 1/5 share, and it is according to the AS 26, that is accounting standard 26. So I'll explain you what is AS 26 later on in the when I solve this sum step by step. Okay, so we'll come for the second adjustment, that is appreciate building by 20% and stock is revalued at 12,000. So here we can see appreciate building by 20,000. That means we have to increase the value of building by 20%. So here we can see the building value given in the question in the previous balance sheet is 60,000. So presently now we have to increase the building value by 20%. So next we'll see that is stock revalued at 12,000. You can see here the stock value is given before 15,000, right? Now it is 12,000. So 15,000 it was the last year value and this year value it is 12,000. So we can easily tell it is decreased. Yes, so it is an stock value has decreased from 15,000 to 12,000. Next we'll come for the next point, that is maintain provision for doubtful debts at 5% on debtors. So basically it is a PDD, provision for doubtful debts, and we have to maintain 5% on debtors. So debtors value we have 20,000 and we are going to maintain 5% PDD on debtors. So PDD means provision for doubtful debts. That means the amount may come or may not come. Okay, so next we'll go for the next adjustment, that is outstanding salary 2,000 rupees. So there is a outstanding of payment, that is salary 2,000 rupees, and it is a liability of the firm. Okay, so we'll come for the next, that is we have to prepare revaluation account, partners capital account, and new balance sheet of the firm. So first we'll see what is revaluation account. So revaluation account means reevaluating all the assets and liability based on the current position of the financial position of the company when I'm going to admit the new partner. Next is partners capital account. So I'm going to prepare a individual capital accounts for the each partner and I'm going to share their things as per the conditions given in the partnership deed or the partnership and close their accounts. Next, new balance sheet. So after admission of a partner, I'm going to open a new balance sheet and present it for the firm. Okay, next we'll come for the reevaluation account. So reevaluation account means reevaluating assets and liability based on the current position of the firm. So when I'm going to readmit or admit a new partner, so what is the current position based on the assets and liability? I'm going to reevaluate both things and make an entry of it. For example, we'll come for the question. So here we can see the adjustment given. So appreciate building by 20%. That means they are telling we have to increase the building value by 20%. So when I increase the value by 20%, that is an income for the firm, right? Yes or no? It is a, sorry, it is a gain for the firm, right? So gain is always a credit balance. So I will record in the credit side of the revaluation account, that is by building account, I'm going to increase it, that is appreciate by 20%. So 60,000 is the building value. So 20 by 100. So it will be a 12,000 of appreciation. So that thing I will make a note here, that is 12,000. So next I'll come for the next adjustment, that is stock revalued 12,000. So here I can see stock values 15,000, right? So before admitting the partner, stock value was 15,000. So after admitting the partner, stock value is 12,000. So difference is 3,000. That means I can tell stock value is decreased by 3,000 rupees. So decrease in the asset is a loss for the company. So I will record under the debit side, that is stock account 3,000 rupees. Next, I'll come for the next adjustment, that is maintain provision on doubtful debts, that is PDD 5% on debtors. So that is basically a PDD, that is provision for doubtful debts. The amount may come or may not come. So there is no guarantee for the amount. So debtors value we have 20,000. So I will take the debtor value as 20,000 and maintain 5% on that. That is 2,000. Sorry, 1,000 rupees. So PDD is an loss for the company. So I will record under debit side, that is 1,000 rupees. Next, I'll come for the next adjustment, that is outstanding salary is 2,000 rupees. So outstanding salary is an 2,000 rupees. It is an liability of the company and I'm going to pay it for this year. So I will record to outstanding salary. It is 2,000 rupees. So make sure all the adjustments are covered. So I'll come for the analysis of the sum. Analyzing the sum, so I'll analyze which side balance is more, debit or credit. So here I can easily tell the credit balance is highest, so I'll carry forward the same balance this side and I will minus all the expenses. So that is 12,000 minus 3,000 minus 1,000 minus 2,000. So the remaining balance will be 6,000. So I can easily tell. So 6,000 profit I have made, that is it applies to the partners. So I can tell income side is 12,000 and the expense side is 6,000 rupees. So after analyze, I'll get the 6,000 as the balance. So this will be to profit transferred. So this profit I will transfer it for the both the partners, that is Maya and Chaya, in their ratios, that is 2 is to 1. So 6,000 into 2 by 3, 6,000 into 1 by 3. So 6,000 into 2 divided by 3 will be 4,000 and this will be 1,000. So I will transfer it for Maya and Saya, that is 4,000 and 2,000. So this 2,000. Okay, so this is analysis of revaluation account. So I can tell building values increased by 12,000, that is appreciation of 20% is 12,000, and next decrease of stock is there, PD is there, outstanding salary is there. So I'm going to minus all the expenses from the income. So I'm getting the profit. So this profit I will transfer it for the two partners, that is Maya and Chaya, based on their ratios, that is 2 is to 1. So when I share this 6,000 in the form of the ratio, that is 2 by 3 and 1 by 3, how 2 by 3 came? That is 2 plus 1 is 3. So 2 by 3 and 1 by 3. So when I share, I'll get 4,000 and 2,000 for the both the partners. So next account. So we'll come for the next account, that is partners capital account. So here it's like I'm going to make a individual account for the both the partners. It's like I'm going to maintain a individual account for the all the partners. So based on what all they have brought from the company from the beginning until the end of the firm. That is end of the firm means till the admission of the partner, what all as partner has brought, what all belongs to the partner, what all I should take from the partner, everything I'll make a note in the partner's capital account. Okay, so we'll come for the question. So here we can see capitals of Maya and Chaya. So always make sure in the partner's capital account that we have to always make the entry of capital balances of the old partner, that is Maya and Chaya, by balance brought down. So Maya capital was 60,000 and Chaya capital was 40,000. 60 and 40,000. So after making the entry of old balance capitals, so I'll come for the new partners capitals, that is cash account. So why I'm going to make a cash account, because Shreya is bringing the capital balance and the goodwill balance as per the cash. So I'm adding this both. 25,000 cash she's bringing and goodwill she's bringing 15,000 rupees. By adding this both, I will make a entry in the partners capital account in the Shreya account, that 25,000 plus 15,000, that is Shreya's total worth is 40,000. Okay, so after making the entry of capital balance of all the partners, that is old partner and the new partner, and I'll come for the question. So here in the question there is a reserve fund given, right? So reserve fund means the previous year or the last year profits which is reserved for the so and so reasons, maybe for the development of the company or any other so and so reasons. We are going to reserve the fund for the future use. So last year the both partners were there, right? That is Maya and Chaya. So this reserve fund belongs to them. So what I'll do, I will share the reserve fund for the both the partners in their ratios. That is 18,000 we have reserve fund into 2 by 3, 18,000 into 1 by 3. So 18,000 into 2 divided by 3 is 12,000 for Maya, and remaining 6,000 will be for Chaya. So reserve fund I have 12,000 for her and 6,000 for her. So after this making this entry, I'll come for the revaluation profit or loss. So here we got revaluation profit rate, so that I will share it for the partners in their ratios by revaluation account. So by revaluation account, so Maya is getting 4,000 and Chaya is getting 4,000. So after this making the entry, I'll come for the goodwill part of the partner who is coming. That is Shreya is coming, right? As a admitting as a new partner. So she is bringing 15,000 as a goodwill. So this goodwill belongs to whom? So this goodwill belongs to the old partner, that is Maya and Chaya. So what I'll do, by goodwill account, I will share this 15,000 in the ratios. That is, she is bringing 15,000 into 2 divided by 3. So Maya will get 10,000 and Chaya will get 5,000. So this goodwill amount is given to Maya and Chaya from the goodwill amount what Shreya is bringing, right? So I should minus this goodwill account, that is goodwill amount, from the Shreya's account. So what I will do, by capital account, I'm going to minus, that is Maya and Chaya, that is from Shreya account I'm taking 10,000, from Shreya account I'm taking 5,000 and giving it for the old partner as a goodwill, that is 10,000 and 5,000. Clear? So here we can see the question given according to as per ES 26. That means I should share the goodwill for the old partners and I should take this goodwill amount from the new partner and share it for the old partners. This is what the accounting standard AS 26 states. Okay, so now we'll come for the question. So capital balance is taken, goodwill is taken, and all the adjustments is cleared. So reserve fund is taken, all the items are taken from the balance sheet. So after making the entry of all the items, so I'm going to analyze the partner's capital account. So I'll analyze which side balance is more. So Shreya balance is 40,000. I'll carry forward same balance and minus 15,000. So I will write 25,000. Next, I'll come for the Chaya balance, that is 40,000 plus 6,000 plus 2,000 and 5,000. So I'm getting 53,000. Here I'm getting 53,000. So I'll carry forward same as 53,000. I'll come for the Maya. So Maya is 60,000, 12,000 plus 4,000 plus 10,000. So she's getting 86,000. So I'll take the balance as 86,000. So this will be two balance carried on 86,000, 53,000 and 25,000. So here your partner's capital account is completed. So next I'll come for the balance sheet of the new firm, that is after admitting the partner. So what all I should make a note in the balance sheet. So we'll follow the balance sheet what is given in the question. All the items will be recorded in the new balance sheet also, but based on the current position of the firm. So first item is cash in hand. Cash in hand. So cash in hand we have 8,000 rupees. So this is one of the important topic, that is cash we have 8,000 and already the new partner is bringing the cash, right, as a capital and the goodwill. The new partner is bringing the cash. So even that I will add up for the cash account. That will be 48,000. So cash in hand account will be 48,000. So next I'll come for the stock. So stock is 15,000, but we had the current value is 12,000. So that I will make a note that stock is 12,000. How it is 15,000 minus 3,000, 12,000. So next I'll come for the debtors. So debtors we have a PDD, that is 5%. So we had 1,000 of PDD. So I will make a record of debtors. So debtors value was 20,000 plus PDD 1,000. So total debtors value will be 19,000. That means the amount may come or may not come. So I'm going to minus the PDD value and make a note. So next is machinery account. So machine value we had, that is 30,000 rupees. I will make a note in the machinery account as 30,000 rupees. So next I'll come for the item, that is building. So building was appreciated 20%, right? So building was appreciated 20%, that is 12,000. So I'll make a note of building also, that is building we had 60,000 plus 12,000, total value will be 72,000. So next I'll come for the investment, that is 12,000. So I'll make a note of investment 12,000. Next I'll come for the liability side. So creditors we have 20,000. So I'll make a note of creditors we had 20,000. Next we have bills payable, that is 7,000. And next we have reserve fund. So reserve fund is already distributed for the partner in the partner's capital account here, so no need to take again. So we'll skip that. We'll come for the last item, that is capital balances of the partners. That is capital balances of the partners. So we have three partners, that is Maya, Chaya and Shreya. So here we can see the capital balance of three, that is 86,000, 53,000 and 25,000. So when I add up all the capital balances, that is 86,000 and 53,000 and 25,000, I'll get 1,64,000. So, and I'll come for the adjustment parts. So before going for the tallying the balance sheet. So this is done, this is done, this is done. So here we can see outstanding salary, liabilities, spending. So which is I should make a record in the liability side, that is outstanding salary will be 2,000. So here I can again analyze the question by telling any adjustment is pending or what. So capital is taken, goodwill is taken, and it is share according to AS 26, and appreciation of building is done, stock is revalued, maintenance period is done, and salary is recorded. So here I can tell I have covered all the adjustments. So at last I'll come for the balance sheet to tally it. So I'll come for asset side first. So I'll start tallying the asset side. So I'll count all assets, that is 48,000 cash in hand, stock we have 12,000, and debtors we have 19,000, machine we have 30,000, building we have 72,000, and investment we have 12,000. That is, it makes the total balance asset value of 1,93,000. Next, I'll come for the liability side, that is 20,000 we have creditors, 7,000 we have bills payable, and 1,64,000 we have capital balances, and 2,000 we have outstanding salary. So again it makes the total of 1,93,000. So here I can tell balance sheet is easily tallied. So this sum carries 12 marks. So any doubts, please give a comment and I'll clarify the doubts immediately, and please comment the important topics which all you want to cover. So based on the comment views, I will make a further videos and upload in the YouTube channel. Okay, thank you. So please have a look into the sum. Thank you. Please comment for upcoming videos.